Welcome to the Near Memo, a weekly conversation about search, social, and commerce. What happened, why it matters, and the implications for local. Welcome back to the Near Memo, episode 115 with David, Mike, and me, talking about local search, social, and commerce, and AI as always. And this week we're going to be talking about Yelp's future. There was an activist investor who suggested that Yelp should sell itself. Mike's going to be talking about that. David's going to get into Google Merchant Center next, which was announced at Google Marketing Live. And I'm going to talk about the addition of images into Google Bard, which is kind of interesting. So, Mike, why don't we lead off with you and Yelp's future?
So on Tuesday of May 23rd, Eric Semler of TCS Capital Management was interviewed on CNBC, and he excoriated Yelp for not delivering enough stockholder value, that he had been invested in for 10 years, and the CEO had enriched himself, but that the stockholders were left with virtually nothing. And his suggestion to solve this was to sell itself to Angi, because Yelp had a really strong services business. He said that most people thought of Yelp as a restaurant site, but their services component was growing 15% year over year, was very successful, and really would make a good match to create enough scale with Angi in a merger. So it struck me interesting. It took this. I mean, he said the other thing he said was no Wall Street analysts are very few are still following Yelp.
He said two were on the previous call.
Two were on the previous call.
Yeah, that was a prelude to the comment. The market has largely given up on Yelp.
Right, and I can understand why, because these meetings, I've attended a few of them. They're basically happy talk, right? I mean, they just are not substantial. It's interesting at a number of levels. I mean, I know David and I wrote an article about this probably 8 years ago, that Yelp really didn't have a long-term path to success. They've actually surprised me in that they found the service business and became a SaaS company. I'm still not sure they have a long-term path to success because of the lack of scale and their declining sort of viewership. But it also struck me that this is a bit of, activist investor trying to hype the stock price. And immediately after, the stock price went up to a 6-month high. So who knows what the real story is? The criticism of Stoppelman as self-enriching, I thought was also fascinating. He also criticized insider trading. I guess a week ago, some chief officer sold a fair bit of their stock. So I don't know. I mean, we've here long thought that Yelp doesn't have a future, or its future is diminished, and this sort of puts it into play. Well, as a takeover or as a merger.
So a couple of thoughts about that. I mean, I think the post GPT AI world of plugins is kind of interesting for Yelp. If there's meaningful usage of ChatGPT and equivalents for search, we'll see about that. But in terms of Yelp's future, so he said there were 3 categories of potential buyers: strategic buyers, whoever that is, private equity, and Angi Home Services, which is the combination of Angie's List and Home Advisor. And Angie's List and Home Advisor has had a bunch of run-ins with the law, so to speak: consumer deception, deceiving small business customers, inflating the value of leads, and so on and so forth. I think in 2 out of 3 of those scenarios, Yelp essentially just becomes a shell of itself. So in the Angi Home Services case, Yelp just becomes a front for whatever, lead gen or whatever. Over time, it becomes totally diluted. In the private equity case, they just suck whatever value out of it and, lay off a bunch of people, and it dies a slow, painful death.
They get the payments that Jeremy's currently getting.
Right. They get the self-enriching, the thing that the guy was criticizing. And then the strategic buyer scenario is sort of interesting. I don't know who that would be exactly, but I think it's valuable to have a company like Yelp around, because otherwise it's just Google, 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 only Google, which is sort of what you guys would probably say exists already. But we need to have more consumer
Has existed for the last 5 years.
Mostly, yes. But we need
amazing.
We
It's amazing I can still bring Greg to a pause.
Well, I mean, I think it's not entirely true that people, people do go to other places to get information. Google is the primary one. Let's say Google is like 80+% or 90%, but
I think only homeowners who live in Northern California.
I go to Google a lot, but I go to Google less than I used to. I don't go to Yelp that much.
Oh, okay.
For home services, I don't go to Yelp. For restaurants, for home services, I have gone to Yelp, and I have engaged using their RFP functionality with different kinds of contractors. But I find Yelp now to be harder and harder to use. It's if you look at the UI, I mean, you guys probably haven't spent much time there lately. They've got all kinds of stuff going on the UI. They have the Yelp guaranteed section, all kinds of buttons. I find it more challenging to use than in the past. But I think, there needs to be competition in local, and Yelp is kind of the only horizontal game in town. There are a bunch of vertical competitors, but so I would be sorry to see it, bought by private equity or Angi, and then, essentially gutted, even though it's kind of not that great as it is.
I'm curious. He criticized the board for largely rubber stamping Stoppelman. I'm curious what the ownership structure is, whether it's really up to Stoppelman to sell or not. And I wouldn't think that his ego would look kindly on that prospect.
Well, I think that I'm unaware. So investors are challenging Google's two-tiered stock structure. I don't think that Yelp has that same structure, but I don't know for sure. But what's a little bit of a surprise, if they don't have that structure, if it's just sort of a majority of the common stock or whatever, they don't have preferred shares. I'm surprised that investors haven't tried to make management changes in the past. Maybe they have, but there hasn't been a lot of news about that. I mean, Stoppelman's been around since 2004. So how many years is that? When Yelp was founded?
19
years. Yeah.
Right. So he's due to exit the company at some point. Now that's either going to happen because he's going to, quote, retire or become executive chairman or something, that's often the way people do it, or there'll be some sort of sale and he'll go in that context. But I think that his personal trajectory is probably out of that company in the next few years, I would think, because I don't think he's going to, why is he sticking around? I mean, he's not an old person. He's probably in his 40s, I think, at this point, but he's got years to do whatever he's going to do. But it's a long time to lead that company. Bezos left, Amazon at 20 whatever years. People get tired.
He may be in his 40s, but he fights me for the curmudgeon crown.
Well, right. Anyway,
I wanted to say a couple of things on this topic before we move on, if I might. So Yelp's market cap right now is about $2 billion, just over $2 billion, which seems to me they must have received offers north of $2 billion at some point in their history. And to this guy's point, if he's been investing in it for 10 years, maybe those offers came before he started investing, but I can't imagine that the market cap has risen dramatically since this guy's owned his shares. We talked a little bit last week about just even though, just the incredible long-term damage to Yelp's reputation among its customers, businesses, by continuing to take a confrontational stance against them at basically every possible opportunity. And you have to think that logic, that philosophy is driven largely by Stoppelman. And so I don't think that there's really anyone to blame except him. And so I would generally agree with this activist, regardless of his motivations, that it probably is time for a radical change in leadership. I think that as I've said, from probably 2008 onwards, I can't think of another company. And I think that this has evolved somewhat. I'm not saying that Yelp is doing this to the same extent that they used to, but I can't think of another company that actively sides with people on the other side of its customers at every possible stage, and is still in business. So I think that reputation is definitely has got to still be hurting them. And then the third thing I'd say is, I think another possible motivation for this guy's rant, or whatever you want to call it, is this perception of Yelp as being sort of restaurant focused, which I think is probably like, do they disclose the number of advertisers by category in these Happy Talk calls?
There is some information about it. Yeah.
In the 10,
okay.
Yeah.
I would guess that there's still a, if not a majority, a plurality of sort of restaurant and entertainment businesses that are, that make up Yelp's customer base. And I think that, there may be a realization that is a very, very, very difficult market for a publicly traded company to make money on, because of the number of the frequency of the turnover of restaurants, their general very low margins. It's just it strikes me as a tough business to try to sell to, a tough vertical to try to sell to. And if you flip that around to home services, these are generally much higher margin businesses. A lot of them are very well established with multiple, field service trucks and all of this kind of stuff. And so I think it's probably a smart move to try to reposition Yelp as selling into what would be perceived as a more profitable, more stable category.
Well, the value of the home services market, according to third party research, is like about $600 billion annually, consumer spending or spending on home services. So it's a fragmented but really big market. Just a quick, before we move on to you, David, just a quick point. Yeah, go
There's
ahead.
Just one more thing I want to say on that same note is, if Yelp had 11,000 general contractors as customers, as it has 11,000 restaurants as waitlist customers, or whatever, that guest manager customers, I would say the value would be much, much higher of those 11,000 general contractors.
Just a counterpoint. Toast, the point of sale system for restaurants, they do other stuff, but that's the core business, is a public company, and their market cap as of right this very moment is $11.4 billion.
So why isn't Toast being proposed as a possible acquirer?
I don't know, but because Toast doesn't need
the reputational blowback probably from their own customers.
And Toast has always been a great company to deal with. We dealt with them at GetherUp, and they were one of the only companies that ever said, "Here's our API, access it." We're not going to, Yelp charges $25,000 a year to access their API or something. It's like, totally different.
And you're not allowed to solicit reviews on any site across the web, because they're allowed to police the entire internet.
Right. And the fines are significant if you do. So there you have it.
Thanks for joining David, Mike, and Greg. To stay on top of the latest developments in local, subscribe to our newsletter at earmedia.co. We'll see you next week.